Okay, good morning, everyone. Today we're going to talk about FINTRAC again. For FINTRAC, everybody have to know the new rules because these years are very strict on FINTRAC auditing. So when you meet with your client, you have to find out where their money came from and what their occupations are. You have to be accurate. So the acceptable occupations, example, chef, accountant, car sales, retail manager, IT company owner, etc. Not acceptable, clerk, manager, businessman, and somebody put investor or real estate investor. This is not recommended unless you are full-time manager for an investor, right? Or yourself is a full-time investor. So you must include the industry and the position, right? Even you say investor, you have to tell us you're a stock investor or a real estate investor, what kind of investor. You have to record the fund source, which is the third party. If the client has no income, like student, homemaker, or housewife, or retired, you have to identify where they're getting their money from. And also for low income jobs like cashier or bank teller, which will not match their purchase. If you need to FINTRAC the person who provided the fund, the third party, right? You got to ask the client where they're getting their money from. If they refuse to give you the information, this is a suspicious transaction. Then you have to tell your manager about it. So be alert. If the mortgage for self-occupied property is 5 times mortgage, 5 times the annual income. If their job is only $60,000 per year, that means they can only get $300,000 in mortgage. If they're buying something for $1 million or 2 million and their income does not match, then you have to be alert. You have to ask them how they can afford this purchase, where they're getting their money from, and record it down on your FINTRAC. For example, students usually get their money from their parents or inherit from their grandparents or their parents. Housewife could have a past job before they come to Canada, or they get their money from their spouse or parents or inherit. Retired people, same thing. They could get from their spouse who's working, or parents, or inherited, or for their past job, right? They've been working for the last 40 years and they made a lot of money. Of course, they can afford. So you had to record down what they were doing in the past. So again, if they were doing a low-income job in the past, you had to find out where they're getting their money from to purchase the house. If the purchaser gave you the money from their own trust account or from their own name, then it's okay. If they don't give you the money from their own personal account, it's coming from a third party for their parents, from their friend, or from a company, then you have to FINTRAC the third party. If you want to FINTRAC the third party, if it's company, you have to ask for notice of articles. If it's individual, you have to ask for their ID to see their information. Then you record the purchaser's FINTRAC. So there are 2 FINTRAC you have to record when there's a third party. You have to record the documents like where they're getting money from, source of fund, client ID information, copy down the driver license or passport number, expire date, name, birthday, etc., and their occupation, their home address, and where they're getting the money from the source, right? And of course, the third-party information, third-party address, that's very important. So when you get deposit for your client, you have to record down on FINTRAC receipt of fund, bank account number, bank account holder's name, bank account type. Is it from savings, line credit? If the name is not coming from the client, then of course you have to FINTRAC the fund provider. So purpose of the purchase, are they buying it for self-occupy or for investment? And that's very important to analysis the client if they're acting on third party or not. Suspicious transaction, we call it STR. You have to report it if you think it's a suspicious transaction to your manager. If the client act suspicious, like low income or no income, are purchasing expensive properties, don't have third-party information, right? They don't give you any information on third party where they're getting their money from, and don't provide you with bank information, and don't have proper ID. They're all IDs are expired, or they're not giving you a proper government ID, or they offer to use large cash to purchase anything over $10,000. So be careful when you're doing FINTRAC. Okay, now we're